In 1 week, crypto almost gave back all of 2025's gains, billions wiped out, a $500 million bet on Ripple, Hong Kong rewriting the rules, and Coinbase hit with a huge fine. If you trade, invest, or just watch the chaos, don't blink. I'll walk you through what happened, why institutions still matter, and where the real opportunities and traps are. Let's go. Let's start with the bloodbath. The entire crypto market shed nearly $182 billion in value this week. Bitcoin slipped below the crucial 105,000 level, and for a moment, traders feared a slide into the $90,000 zone. Bloomberg called it the biggest wipeout since the mid-year rally. Analysts are dubbing it the Red October hangover. Leverage positions got flushed, long traders liquidated, and panic briefly took over the charts. Still, this looks less like a bear market and more like a mid-cycle reset. Hedge fund exposure actually increased according to a global survey. Over half of funds now hold crypto in some form. Institutions haven't run for the exits, they're just repositioning. While the market panicked, Ripple did the opposite. It doubled down. The blockchain firm behind XRP raised $500 million in a strategic investment round led by Fortress and Citadel Securities, valuing Ripple at roughly $40 billion. That's a major signal. Ripple's still pushing for global payment infrastructure, cross-border settlements, on-chain banking rails, and now serious institutional backing. So even when prices fall, the infrastructure money keeps flowing in. Meanwhile, in Asia, Hong Kong just made a major regulatory shift. The city's financial regulator will now allow crypto exchanges to tap global liquidity pools by sharing order books with overseas affiliates. Translation: smoother trades, tighter spreads, and more professional market depth. It's a calculated move. Hong Kong wants to reassert itself as a global fintech hub, especially as the West debates stricter rules. Over in Europe, Coinbase got hit with a €21.5 million fine for failing to properly monitor over 30 million transactions for money laundering and terror financing risks. Regulators said Coinbase Europe's anti-money laundering systems weren't catching enough red flags. The company says it has now fixed the problem. The fine might sound small for Coinbase, but the message is loud. Compliance in crypto isn't optional anymore. Now the courtroom twist. Two MIT-educated brothers accused of stealing $25 million in crypto using a 12-second Ethereum exploit just got a mistrial. Prosecutors said they manipulated pending validator transactions to drain wallets. Defense argued the system let them do it, so it wasn't technically theft. This case exposes a real grey area in crypto law. When code fails, who's responsible? The trial will likely restart, but for now, it's another reminder that crypto's legal foundation is still catching up to its technology. Not everything was red. Privacy coin Zcash exploded this week, up over 1,200%, fueled by traders looking for privacy plays and infrastructure coins during the correction. And presale buzz, a project called Digitap climbed to the top of presale charts thanks to a Visa card partnership and live app demo. But remember, hype moves fast. These plays carry huge risk. Always research before you buy the pump. So where does this leave us? 1. Bitcoin support. Watch the $100,000 to $105,000 range. If that breaks, we could see a short-term cascade to $95,000. A huge 2. ETF momentum. November might still be the month we see renewed ETF filings that could reignite institutional inflows. 3. Regulation split. East is opening up, West is tightening. This divergence might define 2026's capital flow. For traders, tighten your stops, reduce leverage, focus on projects with real use cases. For investors, volatility is scary, but infrastructure funding like Ripple's shows long-term conviction remains. That's your week in crypto. If you found this breakdown helpful, hit that like button, subscribe for next week's recap, and drop a comment. Will Bitcoin bounce or bleed? I'll be watching the charts and the headlines so you don't have to.